All right, we're going to start doing the weekly game plan for September week 1. So the quote of the day is "Too much money ain't enough money" by Warren Money Motherfucker Buffett. So we're going to start with our pre-market prep reviews. So a recap on the price range here. We're going to be careful and cautious of stocks under $1. From this week, we learned that, or from last week, we learned that only about 20% of stocks under $1 that were gappers produced any sort of momentum. The next point is we learned that stocks ranging between 1 and 3 had the best odds of producing momentum. They had about a 50-50 chance of being either bearish or bullish, so there was no clear edge in this area, but as far as percent wise, we want to stick to this range. Stocks over $3 had a dip in momentum plays as opposed to 2 weeks ago, so we're also going to be careful of those. And stocks over $3 tend to produce big moves at open bow and then end up fading over time. So comparing the weeks, this is what we're doing from. So last week was August week 4, and 2 weeks ago was August week 3. So we're going to do this to see where the market is heading. Are we going to get more momentum in a certain sector or section? So from here, our under $1 chances for faders were 90. This is about pretty much equal. So we still have the same opinion going into this week about under $1 chances. 1 to 3 are essentially the same as well. So we want to, anytime a stock is between $1 and $3 in opening in that price range, we want to spend or stay familiar with it. And then anything over $3, this is where the main difference came from. In week 3, we had 9% of those stocks producing some form of momentum. This past week, it dropped down to 37%. So somewhat of a bigger drop. These are, we only had 21 cases of this, so this isn't like the biggest sample in the world, but it is something to note. And then to review the price action of this, so stocks fading into pre-market have an 85% chance of being busts during market hours. So anything that's fading or looks like it has no momentum going into open, we want to stay away from. And stocks that are flat or pushing into open had a 40% chance of being bullish. So again, this number I think was less than the previous 2 weeks, but it's still way better than stocks fading into open. So if we look at this, the fading into open, more than 85% this week failed, where 77% failed 2 weeks ago. Flat into open, this is a bigger change too. So it used to be 65% flat or opening high into the open, and it dropped to 40% with even more runners. So last week you had to be more picky with what you were trading, but there was still momentum there. To put it all together, this is kind of where we combine both of them. So price range from top to bottom, from bullish to bearish, we have stocks from $1 to $3 are opening in that price range. We have stocks over $3 coming in next, and stocks under $1. And then for price action, we want stocks that are pushing or flat into open, and avoid ones that are fading into open. So on Tuesday, if we see 2 stocks that are in the 1 to 3 range that are kind of have momentum pushing and open, we want to stay real familiar with those. Anything that's under $1 that's fading, not that we're going to delete it off the face of the earth, but we want to pay less attention as opposed to the other ones. So moving over into our bullish ticker review, this is where we took all the charts, the open market charts of the bullish momentum from last week, and we ran some tests on those. So as far as time goes, most stocks run before 10 a.m. and these are on the bullish stocks. So when we're trading, we want to get in earlier than 10. It's always a good idea. 57% of stocks hit high day before 10:30 last week. That just means that after 10:30, we have to start taking steps back, using less capital if we're going to be doing that. 64% of the bullish moves are under 45 minutes. So anything, again, that's starting to be like an hour long, we want to be wary of. And then for the price, the average bullish move is 50% from the low to the high, and expecting a 25% move for an individual leg. So there could be 2 to 3 leg ups in the actual ticker, but we're looking on average about 50% from the time of the move to the end of the move. In comparisons to last week, this number was 63%. So a lot more actually started to run before 10 a.m. this week. And surprisingly, these two numbers were actually very identical, which just means, again, we want to stay away from things past 10:30, and then we don't want to overstay. And once the stock starts to push over an hour, that's when we kind of back off. Average bull of move 2 weeks ago was 68%. Not that that's a big deal, and we're going to use that when I'm trading, but it's just something to note. Now we're going to go over to pattern recognition. This is where we look at individual patterns, bullish or bearish, within momentum stocks or bearish stocks. So the few we want to highlight is the dip to previous high, the dip to key levels, the inside 5 flags. For bearish, we have key level fails, high day break and fades, and up down. Some of the things we noted were the bearish patterns. There were only a couple that we noted, which is good, since we can identify if a stock is going to be bearish for the day. Overall, more bullish than bearish. So last week we still had momentum. It's a little bit different than the previous week, but as far as this year or this summer, definitely some opportunity. And we want to play flags overview up in the 1 on EMA. So now we're going to go ahead and review just a few of the bullish ones. So this is an example of the inside 5 flag. We have an extended push down. Remember, if this area doesn't hold, to keep it on your watch just in case we re-break over VWAP here. Dip to previous high. This also happens later in the day, between 10 and 11, or a little bit past 11. If we have a clear high here and it breaks, look for an extended pullback that kind of dips back to that area. VWAP reclaim, this is more of a signal of bullishness. So we're not adding here, we are adding over here instead, but this is always a good sign to see. We've seen this last week and the previous week. Some bearish factors were the high day break and fade. There was a bunch of stocks that the first 5 minutes of open tended to break high day with a wick and then fade all day. Okay, how do we get over here? We had a lot of key level fails. So in this case, this was a gap fail. But we also have 200 EMA fail, daily pivot fails as well. Up-down pattern is used for multi-day patterns. We're going to tend to stick away from multi-day ones. If we do, play one flag. If it doesn't break, just get out of there. And then keys to winning this week are consistent volume. We want to play with consistency. Don't get head over heels. Stay focused, locked in, even when there are no trades. There were a few times last week where things were slower, but then we would have things like this VWAP break. Where's she at? Here, where instead of using capital in this section or this section, use it when it's actually pushing. And then the last thing is to be patient as well. That goes hand in hand with this one as well, but just want to be patient. Let's not get greedy at the open. And yeah, that's going to be